Hello, good morning. Welcome to the morning brief. Today is Friday, August 1st, first day of August. So, what's going on today? Looking at forexfactory.com calendar, 8:30. We just had the average hourly earnings month over month come in. They came in as expected at 0.3%. Nothing to worry about there. Non-farm employment change, however, came in at 73,000. Expected 106,000. That's a big miss. So the market did not like that. Unemployment rate came in steady at 4.2%. So maybe we've got some of the first chinks in the armor of employment as the non-farm employment change disappoints. 9:45, we've got final manufacturing PMI. 10 a.m., we've got another red item, ISM manufacturing PMI, ISM manufacturing prices, and revised University of Michigan sentiment. Construction spending month over month, revised University of Michigan inflation expectations, all at 10 o'clock. So we've got some red, orange, and yellow items. Also, we have all day long the Ward's total vehicle sales coming in all day long. So really a lot going on news wise today. So let's look at the chart. Looking at the daily chart, of course, yesterday we had the big gap up and the big crap. So it's called a gap and crap. Imagine that. A really, really ugly day. And then today we're having the same as gapping down and going down again. Pretty ugly. We did have fairly decent volume. Volume was much better than it has been on that big down day. I think people are starting to realize that tariffs are bad. Uh, Inflation's probably going to go up. The Fed is not going to lower interest rates. And on top of that, we may have a labor problem. So, yeah, it's kind of ugly. I'm moving on. Oh, well, we have now breached the first moving average. So we've been above all the moving average, and now we are below the 20-day moving average. It's really the first time in a while that we have been below this 20-day moving average. We're also back into this consolidation band of the bull flag from several weeks ago. So this should be support. We'll see if it'll keep coming down, but with this area here should be support all the way down to 62.46. Where could we go? We certainly could bounce up and retest this trend line. Yeah, maybe 63.91-ish area. Of course, the downside is the bottom side, this high volume node, 62.37. All right, looking at the 60-minute inventory. Inventory was positive yesterday, about 8,000 contracts on down volume. So that is a divergence. And what does that mean? To me, it means there's bottom fishers or buy the dip folks that are getting sucked in here. And that's why we have positive inventory on negative price action. And I guarantee you those buy the dip folks are going to get burned. It's going to continue to go down at least for this foreseeable future as we digest some of this information as well as what is going on with the tariffs. That's very concerning. Overnight action was gigantic, 78 points, 78 points. That is a lot, considering we've been running around 1920 on average this week. So what do we got going on to the downside for support? Support 62.80, 62.60, 62.50, 62.30, 62.20. Lots of support underneath. Resistance on the top side 63.73, 63.90, 6400 is going to be a big one. 64.10ish, 64.20. So those are your support and resistance numbers. Stock Traders Almanac today is decidedly negative with a 38.1% chance the market will be up. That does not bode well when the historical number lines up with negative news. So there you have it. Hope you have a great day and a great weekend. I'll see you Monday. Happy trading. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com.